Welcome back to another lesson of AllGen Academy. So today we're going to really bring together several concepts because we've been talking about different investment vehicles such as stocks and bonds and alternatives. So today we're going to talk about mutual funds and exchange traded funds, which really bring those together because of the nature of what they are. So Jason, let's jump right into this. Talk to me, what are funds?
Yeah, so funds were originally put together to be able to provide the average investor a way to kind of spread around their risk. And let me explain what that looks like. So you can see here a little picture of a basket here. So imagine this basket is a mutual fund, all right? And then you get a lot of different investors that put money together into this fund. So it is mutually, a bunch of people funding it, it's mutually funded, okay? So now you have a pool of money inside this mutual fund that you can go out and invest. And let's just say, for example, it's a stock mutual fund. So you could buy companies like Apple or Amazon or Microsoft, and that fund could own all of those inside of it. So if you were an investor of that mutual fund, you would own a bunch of those different companies.
By owning a piece of the basket that owns all those companies.
Yep.
I mean, you don't pick it, they have hired people to pick the stocks for you.
That's exactly right. So the mutual fund manager would be the one buying those stocks, okay? Now within stocks, you can also have just large US stocks, okay? Or you can have value stocks, you can have growth stocks, you can have small company stocks. So you can have all these different types of mutual funds.
We'll refer you to the stock lesson that we mentioned earlier.
And you can have international stocks, emerging market stocks. You can also have bonds inside of a mutual fund, and that would be a bond mutual fund, and all the different components of bonds too. A corporate bond fund, you know, a treasury bond fund. You can have all the different types of bonds or even specific bonds in one mutual fund. And then finally, as you can see here, the chart of gold bars here, you can have an alternative fund where maybe they own only gold, or maybe it owns only real estate. So all wrapped in, so an average investor can go in there and buy shares of that mutual fund and own a bunch of different types of either stocks or alternatives or bonds, you know, different types of investments.
Now, let's say, you know, I'm not super aggressive, but I know I should own some stocks because I saw the stock lesson and it said I should, right? Or I did a risk profile questionnaire, but I'm also not super conservative because I'm still in my 50s and I know I'm hopefully going to live a long life, so I don't want to have it all in bonds. You know, are there mutual funds that invest in both?
Yeah, and that's called asset allocation funds. So the answer to your question is yes, there is, and they may own a little bit of everything, and they may do the whole diversification and asset allocation, which we'll get into in another lesson, for you in one fund. It may be called like a balanced fund or something like that.
Okay.
Yep.
Okay.
So let's look at the different types of funds. You have mutual funds and you have an exchange traded funds. There are other funds out there, but those are the main ones that people typically invest in. So the main difference is a mutual fund will only trades once a day. It trades at 4 p.m. the close of the market. It only trades once a day. An exchange traded fund trades like a stock where it trades during market hours. That is the main difference between a mutual fund and an exchange traded fund. Both of them can hold all different types of investments inside. You know, a lot of times one other differentiating factor is exchange traded fund most of the time doesn't have as much active buying and selling of stocks inside of it, although they do have those as well. So sometimes they, you know, will own more like an index, you know, like the S&P 500, you know, and it's not bought and sold all the time. So, but those are the two different types of funds. Some of them have a little bit of advantages, but they're very similar. And those are the two main things that you would invest in to own all those different types of investments.
Now, one difference between mutual fund and an exchange traded fund, which Jason mentioned, is when they trade or when you can trade them. So for example, you know, you hear the Dow Jones Industrial, the S&P's tanking today. Okay, so you know, you turn on the news at 10 and all of a sudden the market's dropping and you own a mutual fund. Sell me out, sell me out. Well, no, you can't. I mean, you can, but it's not going to sell out till the end of the day, which means by putting a sell order, we're not necessarily going to save you, if it keeps dropping the rest of the day, because it gets valued at the end of the day, whatever the market or the stocks, underlying stocks did that day.
That's right.
Another big difference.
Well, if you were that person that called, we'd ask you to watch our compounding time value of money, because we shouldn't try to time the market if it goes up and down.
That's exactly right. But in the example, just some people say, hey, you know, sell me now. In exchange traded fund, you hit like a stock, you can click a button and you can sell it out. Okay, we're not encouraging that type of behavior.
And on the flip side of that too, you know, sometimes we've actually had clients, and we do own some mutual funds, and they see the stock market's up, but they're like, my account's not up that much.
Right.
And they're looking at it during the day. Well, it's because it hasn't priced yet.
Right.
It doesn't even price till 4 o'clock, and actually they have to do a lot of accounting to calculate all the different investments, and then you don't even see it priced until later on that night.
That's right. Now, another issue with mutual funds is that, remember, you're putting in money, you're buying a share of this big company, right? But part of that money that you're putting in and the performance is paying the staff and the cost to run the fund.
That's right.
So funds have internal expenses.
That's right.
Okay. And you hear on this, you know, what are the expenses of these mutual funds? Is it cheap or is it expensive? It's cheaper to buy an ETF maybe than to actually buy a mutual fund because, as Jason mentioned, ETFs don't trade as actively, so they may not have as much staff. And a mutual fund may trade a lot more actively.
Right.
Or a mutual fund trades in, you know, emerging market small cap stocks, which require more staff and more research, more resources, so they charge a higher management fee.
That's right.
So these are different dynamics, and you know, we're not saying one is right versus the other. Fees are important, but they're not the end all.
Yeah.
Okay, and our stance at AllGen is not so much what you pay, is what you net. Okay, there's a reason why some cars are more expensive than the others.
Yeah, and we get deep into that when we talk about kind of active versus passive or versus index investing, another lesson too. So.
Right. So, but that's another dynamic to be aware of. Some people say, "Oh, I don't buy funds because they charge me fees. I just buy stocks outright." Well, maybe, maybe not. Okay, but we'll talk about that, as Jason mentioned, in a future video. So, thank you so much for listening, and we hope to see you in the next lesson.